So the question really is not necessarily where gold and silver are going to be by the end of the year, but the question is, by the end of the year, are we going to have a situation where the dollar no longer functions? It could be. I'm not so set on that. I'm still waiting for the final financial crisis where the Fed is going to have to print about two or three times as much as it printed in 2020, which was two or three times as much as it printed in 2008, which is two or three times as much as it printed in 2001. So the question is the monetary system based on the dollar going to survive the next printing round? Maybe it will by December, by 2025. I'm not so sure. So that's really the question, not necessarily the dollar amount of the exchangeable rate between gold and silver, but is the monetary system as we know it still even going to function at all?
In the ever-shifting landscape of global finance, Rafi Farber, publisher of The Endgame Investor, offers a perspective that challenges conventional wisdom. Farber's newsletter, which delves into gold, silver, and economic trends, reflects his keen interest in the stability of the dollar-based monetary system rather than making precise predictions about precious metal prices. Central to Farber's analysis is anticipating a potential financial crisis that could eclipse previous economic downturns. He posits that such a crisis might compel the Federal Reserve to engage in unprecedented levels of monetary expansion, dwarfing even the substantial interventions of 2020, 2008, and 2001. Consider the Fed's actions during the 2020 crisis to put this in context. From February 26 to June 10 of that year, the Federal Reserve's balance sheet ballooned from $4.16 trillion to $7.17 trillion, an astounding $3 trillion increase in 3.5 months. This rapid expansion was achieved through massive bond purchases from financial institutions to lower interest rates and stimulate economic activity. The scale of this intervention becomes even more apparent when examining the weeks ending March 25th and April 1st, during which the Fed's assets grew by 12.6% and 10.6% respectively. Notably, on March 23rd, the Dow Jones Industrial Average hit its lowest point in a year at 18,592 points, underscoring the gravity of the economic situation. Given this historical precedent, Farber's key question emerges. Can the current monetary system withstand another round of extensive money printing? While he remains uncertain about the immediate future, Farber doubts the system's viability by 2025. Please tune in for our exploration of Rafi Farber's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I don't know exactly where the price is going to go. That depends on what the bank derivatives do. I mean, I just had this interview on my channel recently with a guy named Brian Kuzmar, who is a gold and silver shop in Fort Lauderdale, and he says right now that his main business is selling numismatic coins, not marketing them necessarily, but he has estates that are being liquidated because the old relatives die, grandparents die, and then you have all these gold and silver coins that they collected, and
Right.
he's getting a lot of money on them. But on bullion sales straight up from his coin shop, he's not getting much. So right now we have a very low interest in just straight up bullion, and he's not making much money on that. And the way he puts it is that gold and silver bullion, at least in terms of physical stackers, our percentage of the market is a pimple on an elephant's butt. That's how he puts it. And I agree with him, and that's true. But the thing about that is it's very tricky because once because the reason that the demand in the gold and silver markets in terms of physical bullion actually holding your hand is so small is because the dollar still works. But in a
Yeah.
world where the dollar doesn't work anymore, all of a sudden you can have everything change. Like if the dollar isn't working, then where do people go? They can't go on above the pyramid where I think Bitcoin is, and you can argue with me about that if you want.
Mhm.
They have to go below it, below the dollar where gold and silver are. So I'm saying in terms of like the dollar running out of steam, then you'd have everybody in the world simultaneously because all other currencies are based on the dollar going into gold and silver. So the question really is not necessarily where gold and silver are going to be by the end of the year, but the question is, by the end of the year, are we going to have a situation where the dollar no longer functions? It could be. I'm not so set on that. I'm still waiting for the final financial crisis where the Fed is going to have to print about two or three times as much as it printed in 2020, which was two or three times as much as it printed in 2008, which is two or three times as much as it printed in 2001. So the question is the monetary system based on the dollar going to survive the next printing round?
Mhm.
Maybe it will by December, by 2025. I'm not so sure. So that's really the question, not necessarily the dollar amount of the exchangeable rate between gold and silver, but is the monetary system as we know it still even going to function at all?
Rafi Farber draws attention to what he perceives as deliberate underreporting of inflation by government agencies. Farber argues that this practice aims to maintain public confidence in the current monetary system. To illustrate the potential consequences of such policies, he points to the ongoing political turmoil in Venezuela. Venezuela's recent history provides a stark backdrop for Farber's concerns. The South American nation has been no stranger to political unrest, particularly surrounding its elections. 2018 citizens protested en masse following President Nicolas Maduro's controversial re-election. The following year saw another wave of demonstrations when opposition leader Juan Guaido declared himself interim president, challenging what many considered a rigged electoral process. The pattern of post-election protests in Venezuela continued in 2024. Following the July 28 election, where Maduro once again claimed victory over challenger Edmundo Gonzalez, and widespread demonstrations erupted nationwide. These protests, reminiscent of previous years, underscore the deep-seated frustration and distrust many Venezuelans harbor towards their government and electoral system. Let's get back to the interview.
We know what is real objectively in terms of what real money is, which is gold and silver. We don't know how deep the illusion of the dollar is right now. We don't know how much it's actually worth and how much it should be worth. That's all very blurry. None of us know that. And in terms of what the government counts and what it doesn't count, I just wanted to spell one notion here. It's not that the government is so slow and they forgot about shrinkflation. They're like, oh, well, it takes a while for the BLS staff to put a new thing into their formula, so we got to give them time. They do this on purpose. They purposely do not count shrinkflation so as not to reflect into the CPI, because they're trying to prolong the psychological breaking point as to when the public finally wakes up and says this is all crap. It's not just in the monetary system. In the dollar itself would be the foundation of all governments, and all governments based on the dollar. But we're seeing it in Venezuela now, where the people are like, enough of this Maduro stuff. We're going to knock down the statues. And hopefully the army is on their side. I'm praying for the Venezuelan people. What I'm looking at is the last two crises that we saw. 2019 and 2023, right? 2019 was the apocalypse, where the repo market buckled up and interest rates went up to 10%. And in 2023, the regional banks suddenly needed a bailout of how much was it? I don't know, $1 trillion, whatever. I don't even remember. I don't know what it was. It was a lot of it was a lot of dollars. The apocalypse in 2019 happened when the bank reserves in the system reached the pre-QE3 level. Right? There was QE1, QE2, QE3. So QE2 ended at about 1.4 trillion. And then QE3 happened, and then there was QT, quantitative tightening, which is the opposite. And then we went down to, again, about 1.4 trillion in bank reserves, and then all of a sudden there's this apocalypse, and the repo market freezes up. We don't have time to get into the details of exactly why that happens to that number. In 2023, you had the huge increase in reserves in 2020 from all the COVID printing, and then a descent back down to about 3 trillion in reserves, and then you had a regional banking crisis. So now we're about 3.25, 3.27 trillion. So my theory is that when we hit 3 trillion or somewhere around there, we're going to hit another banking crisis. And whether that is the end or just another major event towards the end, I don't know. But look for that and see what happens to the monetary system after that. It could very well be the end. And the point is, you want to be prepared for that being the end of the monetary system, rather than trying to place bets on it. Because if you keep placing bets, you're never going to bet on the end. And the easiest way is just to bet on the end and then just be secure in that with gold and silver. And if it's not, it's not. You just hang on to it and wait for the next thing. You're secure either way.
As we approach potential tipping points in global finance, it becomes ever more critical for investors and citizens alike to stay informed, critically evaluate economic indicators, and consider diverse perspectives. The coming years may well determine the resilience of our monetary system and the shape of the global economy for decades to come. What steps will you take to prepare for possible significant economic shifts? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.